Today on the Truvix podcast, I'm joined by Rob Stewart, the founder of CR Equity.Ai. Now, Rob's journey started with a simple question. How can we make funding faster, fairer, and smarter? What began as a code script he built to solve his own frustrations has evolved into a powerful AI and blockchain platform that's changing the way businesses and real estate investors access capital. From underwriting loans in minutes to opening doors for small businesses owners who just need that one shot. Rob and his team has created a system that levels the playing field. Rob, I'm excited to have you here. Welcome to the show.
Thanks, Marcus. I appreciate you taking the time and having me on today.
You're welcome. Now, let's start with the spark. What pushed you from working loans to actually building your own software platform and solution?
Be honest with you, man, I've always been an entrepreneur and a dreamer. And it just seemed like time and time again, we continue to come up a little bit short when it came down to the capital stack. And for whatever reason, I just saw an opportunity for us to really break through that glass ceiling, if you will, because there's a lot of money out there and there's a lot of people that are willing to, loan you money and invest with you. But, if you don't know where to go or where to ask questions or even how to go about structuring a deal, nobody's ever going to come to you. So the AI really, to me, was a bridge between someone who, was seeking capital and then those who, are out here with a lot of capital looking to put it into worthwhile projects. So it's kind of self-serving, but more so than anything, I just saw it as an opportunity to bring the ability for folks who, want to realize their own dream, become an accredited investor, be independently wealthy, have passive income, to really be able to reach those folks who sit on a lot of cash and are able to make their dreams come true by putting them together in one environment.
Okay. All right. Now, what I find really interesting when we talked is your background. You've been in the Air Force, worked with the government, and even have a law degree. Now, how has those experiences shaped the way you run your CR Equity.Ai today?
Oh, wow. That's a great question, Marcus. I would just tell you that the discipline in which you learn in the military is applied to anything you do. Perspective, if you're working in the budget office or if you're, flying an aircraft, you learn how to be an officer first and take care of the people to your left and right. So that's something I have come very much accustomed to and as a part of, my DNA as a fabric and almost as an ethos. With respect to my experiences in industry and working with government regulations and also on the legal side, what I try to do is I try to put us all in position to be successful. And when I was writing the initial code and script for the software, I said, let's just do it right the first time. So we have fully AML, anti-money laundering, know your customer KYC, blockchain immutable ledger that irrespective if you're coming on, you're seeking capital, you're a broker, you're a lender or an investor, you go through the same KYC AML background check. The person you're talking to, the people on the platform, even, my admin folks, are, they background check. So you have that safety and security that the people that are on there are who they say they are. And more importantly, in the event that something does go wrong, we know exactly, because it's on the blockchain, you can't get rid of it. And we know exactly who to contact and if necessary, provide that information to the necessary authorities or whoever to go after them. So for me, that peace of mind enabled by blockchain and also artificial intelligence with the security aspect of the security that we have in the background makes it where it's a harmonized platform for people to come on. So it's like just balancing all three of those talents in one area, knowing where the pain points are, taking what I know, my experiences, and then more importantly, weaponizing a platform to kind of ring fence and protect people from those obvious issues.
So I know you started tinkering with code, and so you just mentioned that your first thing was to make everything into a business right away, right? So that was your goal, is to make it into a company serving commercial real estate and business nationwide, correct?
That's correct. Yeah, so we started off as a boutique mortgage loan originator. The software really was just kind of kept in-house because, to be honest with you, Marcus, we got a lot of crap. People were just sending us stuff over, and it was just taking us an inordinate amount of time to underwrite. So I created this small little script, not that much, probably had 1,300 lines of code or something like that. And it basically was just automating my underwriting process internally. that grew as, requirements grew. And as I started doing more business and like you said, the nationwide footprint, we had different things we had to look at for different states, different considerations. And then the AI kind of thing came out and I'm a nerd by nature. I'm actually looking at a bookcase over here with probably 300 books or so. I kind of taught myself Python. I taught myself, how to use JSON and APIs and integration, kinds of calls and lookups and posts. And through that, I let a couple of my buddies who were underwriters for banks and credit unions, one's a mortgage loan originator officer. I look at it and tinker and give me feedback along the way. And, fast forward to the day, we actually have this really cool technology that really enables you to move at the speed of business. You don't have to wait the typical 30, 45 days to underwrite a deal. We can do that almost instantaneously now and get you a loan commitment and fund your deal, literally in the same week. So it's just really, dotting the I's and crossing the T's. Marcus, we don't do anything sexy. We literally are just meat and potatoes guys, man. I just found a way and took advantage of an opportunity because it's really just connecting dots. I mean, when really sit down and think about it, I just said, okay, here's my objective. I've got people like Marcus who are out here. They've got a 9 to 5. They may have an opportunity to get a rental, a facility or something like that, but they don't have, you don't have, 10 or 15 days to go out and do all the underwriting and due diligence. So why can't we just have software do it? Right. And now it allows you to, from your phone, just like you do if you were to go apply for a car loan, right? You can take a photo with, of your property. You can pull it up on our app. You can get your quote right there. You can send it to your wife. You can send it to your investors. Say, hey, look, this is the property I just came from. And here's my quote right here. Is this a deal that we want to do? And while it's not a 1-for-1, it's not like going to the Toyota lot and getting a Tundra. Now you're able to actually see the finish line because on our platform, if you get a term sheet, you pay your loan commitment fee, $250 as a consumer. You're going to be given a loan date, your actual closing date. We will tell you, hey, look, we're going to close on or before this date. And how we're able to do that is very simple. We have all this data that tells us, hey, similar, assets have closed in this amount of time. This is what we have. This is what's missing. And it's just controlled by parameters and also our algorithmic function. And it helps the client along the way. Like we put you in position to be successful along the way. We just don't leave you out there, thinking, hey, I submitted my loan application. When's Marcus going to call me back and tell me I got to submit my driver's license and my bank statements and all that? We do all that on the front end so that when you get to the back end, you see, hey, you got that conditional approval. You're just waiting for your appraisal and clear title to come back. The attorney's over there drafting the loan documents. Once that appraisal comes back, the valuation is good. We verify the payoff, close the deal. The things that we do, Marcus, is not sexy. Like I said, typically in a normal hard money or private money environment, what happens is, just to give you a 30-second soundbite, you have to come in and everything's a finish to start relationship. I've got to go and I've got to complete a loan application, loan submission form. Then once I do that, then I submit my bank statements. Then I go and I order my appraisal. Then when the appraisal comes back, then I go and I open up escrow. Then I notify the attorneys that I want to come back and do the loan documents, right? And it's very sequential, right? It's very rote, it's slow, it's cumbersome. Whereas when you come on a CR Equity, you fill out your loan request form, you upload your documents. That populates into a large language model. All that data and information feeds multiple applications and forms at the same time. As soon as you click accept, we order your appraisal, right? A notice goes to title to open up your escrow. The attorneys get notification to write your loan documents. That's all happening in parallel. So now you're taking all these things that were just a week here, a week here, a week here, 2 weeks here, and you're truncating them down now to where you can actually move at the speed of business, right? And some states, just to let you know, some states have what we call e-title, where you can actually do a title search, get it certified, have the insurance policy issued, and literally close that deal the same day. Now, we're not there as a global enterprise yet because of the fact that, some of them require you to send a person down to the county and get tax records and do the title search. So you still have those things. But as far as on our end, Marcus, when a client comes onto our platform and they sign on, within 5 to 7 minutes, they're going to get a term sheet, right? If they move forward with that, those are going to be the conditions. We factor in the risk, the location, the leverage, the credit score, the background, the experience. That's all done in real time based on AI. And unlike all these other hard money and private money lenders and people out here doing AI or whatever else, ours continues to actually feed itself. So every time we run a loan or you call our AI assistant and have a conversation, that information goes into a large language model and it teaches itself, right? Through automation and machine learning and deep learning, it weeds out the negative things, the things that slow it down, and it keys in on those things that are efficiencies, and it makes itself better over time, right? It's a continual loop, kind of a Kaizen. And that's how we built the software, is to continue to get better and provide better customer service for a client.
Okay, so you're the leading edge of the technology of actually using it to do the you use the phrase of in by 9, out by 5 funding. So I like that phrase, and you just explained to it because everything is going simultaneously once they submit everything to you. So
Correct. Correct.
okay, all right. So and you walked us through the platform to make the process faster by everything simultaneously. Now let's look. Tell me about a story how that happened in real life story or situation.
Well, I mean, I'll put it like this right here. When I first engineered this platform, I thought about it, Marcus, from almost being like a lending tree for commercial lending, where a client would come in, and I'm not going to bash any other platforms out there. There are several out there. There's a $1 billion platform out there. That's a number one private loan lender, and they have 200 or 300 loan originators that work for them, and they broker deals out, and they have a really good system and process. But even with that, we did a lot of intelligence, a lot of background intelligence on our competitors. And I got out this blue notebook right here. I actually keep it beside me. And I wrote down, and I do my own intelligence on my own. And what we found out was, even though it's private money and it's hard money, it really doesn't move any faster than institutional financing, right? It just doesn't. And the reason why is that even though it's private money, because it's private money, people are more reluctant to actually move quicker. So what I saw was an opportunity. For example, I had a client come to me, great experience, asset was performing well, and just went through a divorce. Credit score took a major hit, right? And he was looking to refinance this asset. However, because they didn't, quote unquote, fit inside of the credit box, the private money lender that they had always gone to just flat out declined them. Now, the way most of these firms work is they have a credit box. So they originate a loan and buy box on the back end that buys their loans. That's just how it works. So they don't hold their own paper. The difference between us and where we add value in a real-time example is we actually have a debt bond. So I have a family office that provides me an equitable line of credit based on essentially a bond, a large security instrument. And they say, hey, look, we're going to give you some cash. We want you to go ahead and originate loans, and we want you to put as many qualified asset-based products, single family, multifamily, office, whatever, into this bond. And we don't want you to sell it. We want you to maintain it. We want you to service it, because it's going to be an asset-based bond, and we're going to wrap all that stuff up with those notes, and we're going to sell them back to the exchange and make 3 times the money that they give us. That's a different way and different model of doing business, because now, Marcus, instead of you waiting on underwriting, you're talking to them. I make the decision on what I want to do, which is my software. So when you're talking to the AI, you're not, when you go into a hard money situation, you usually have a mortgage loan originator or a loan officer, right? And they're going to get all your paperwork, and then they're going to hand you off to a processor, right? Then they're going to hand you off to an underwriter. And then that's when that, what we call the S hits the fan, because now the guy that's 3 levels removed, he or she is usually a very, very, very prickly person. They're usually very detail oriented. and they're just looking for a reason to say no to your deal. That is their job. Their job is to say no. Okay. They are not your friend. They are here to protect risk in the house. They're playing with house money. They don't want to lose their job, and they're going to find a way to blow you out. That's just how it is, right? The key differentiator for us and where this gentleman came in is that we looked at a couple things, right? I was able to justify a lower credit score for this gentleman because his asset was performing. The asset was at a 1.3 DSCR. It was 30% over what he was actually servicing the debt for. He had just paid it off. It was a cash flowing asset. He had owned it, and he's done this 30 other times. If I had worked for JP Morgan Chase or one of these hard money lenders, they probably would have fired me because it didn't meet that credit box. That's a risk. They got to hold that on their books and paper and all this kind of stuff. Whereas I took a chance with this gentleman because, number one, our data, our sentiment and contextual analysis of our AI gave us essentially a risk criteria, risk rating for this gentleman that was off the charts, despite the fact of him having a lower credit score. Now, he had to fully guarantee the loan. We actually put some insurances on it, and then we cut him back on his LTV. We didn't give him, all the cash out we needed. We structured it in a way where he came to us with a debt schedule. We paid off his debts. We refinanced his asset. That allowed his credit to go up, right? We pulled his credit right before closing after structuring all the debt payoff. And then more importantly, that he got the cash he needed to go in front for another project. Because of that experience, he's referred friends and family to us. And now he tells all his buddies and his friends, hey, I'm not going anywhere. I'm calling Rob. Or he'll just go on the app and do his own thing. But so I mean, what we've done, Marcus, is we've moved everything from if you've got a deal, right, and you're getting ready to buy something and it's September the 24th and you got a closing date of October the 17th and you got $500,000 in non-refundable earnest money deposit, you're in a situation, right? And lenders know that. They know that. So they know they can charge you $800 over SOFR, 14%. And you're going to pay it because it's quote unquote hard or fast money. We're not institutional rates. So we're not like a HUD loan at 4.5%. But our stuff is so reasonable because we don't have any overhead. The technology moves faster than any other underwriting process, number one. And then number two, because we don't have any overhead, because it's just Amazon Web Services and data, we're able to run very, very lean, very, very lean. So we can compete with institutional firms, but at the speed of actual business, right? And the third thing about that is it doesn't matter. It's kind of like being able to swim, right? It doesn't matter if you can swim in 3 foot of water or 300 foot of water, right? Our deals, it doesn't matter if you want a $300,000, rehab fix and flip, or you want to refinance a $30 million, 100 single family portfolio. It's the same data, just a little bit more paperwork.
Yeah. Okay. So just transition to who's the best fit, because, I already have listeners wondering, is this for me? So who's the best fit target audience?
Anybody who is looking for a good customer service experience and has a requirement over, $100,000 and above, up to $200 million. We've got some credit lines for that. We'll look at just about any type of asset class. The only 2 states we don't lend in are the Dakotas. There's some legal issues with that. But other than that, we're not very picky because at the end of the day, we're going to know within about 8 minutes when you send me over stuff if it's something we're going to do, and we're not going to waste your time. I'll tell you, hey, man, we'll do it. And if I tell you we're going to do it, we're going to do it because you've got a piece of paper right there that says we're going to fund this loan. Our goal is to have 100% loan approval. When you get a term sheet and you sign off on that, we want 100% funding, not just loan approval, but actually funding of those loans in 2026. That's my internal goal, is to have 100% funding. So if somebody comes in, they get a quote, they say they want to move forward, they execute, I want to fund 100% of those loans. I don't ever want to lose a client because of time. I don't ever want to lose a client because of price or because of a quarter of a point or some ridiculousness, right? I want to move at the speed of business, and I want to be able to provide excellent customer service because people remember, what they experience, what they feel. And if that guy has that $500,000 in earnest money deposit and you're able to close that loan before he loses it, he remembers that. He comes back to you. we want to put the work in. We want people to experience it. But anybody who is looking for something that requires a dollar sign with regard to asset-based lending, we want to have a conversation and get an opportunity to earn their business.
What's
Yeah,
what's been the biggest driving behind growth?
believe it or not, the administration, man. I don't want to make this a political conversation, but for whatever reason, the change in administration really has made people want to get back into business. We're modeled on a blockchain and crypto ledger, so crypto and AI right now is huge, and people are just, every day I get bombarded by good people like yourself who are asking questions about AI and all this kind of stuff, and are looking for different ways to be innovative. And I mean, Marcus, I'm just blessed, man. I don't even know. I run this shop and I work 20 hours a day, but I love it. And hopefully I hire a staff when I get a chance to put my feet on the ground. But I just think that people are just tired, man. They're tired of waiting. You know what I'm saying? Like it don't cost them nothing to give Rob a call and put an application in. So why not? You know what I'm saying? It's kind of FAFO kind of thing. You know what I mean? It's just like, hey, let's just see what happens. I don't know. I mean, the worst thing that could happen is, it ain't gonna work. You know what I'm saying? So nah, man, we're just excited, man. We're just blessed, and I've got a good team, and we're growing. And for whatever reason, man, I don't know I mean, that's a great question. I wish I had an answer for it. I will just tell you that every day in my inbox, I get a 20, 30, 40 million, $100 million refinance. And some of them don't work out, but I mean, we've probably had well over $650 million worth of deals in our pipeline, and it grows on a daily basis. And we're going to get through it between now and the middle of next year. I mean, we've got some portfolios and things like that. So the numbers don't really scare me. What we're trying to do is add value to people's lives. We want to add value to your business, and we want partners. We want good people. Yeah, absolutely. Yeah, I mean, so this is not to brag or anything like that, but the way, excuse me, the way we structure these deals is we have to buy the paper from a capital provider, and we have to do it at a lower LTV in order to get a lower coupon rate on these bonds. So we can only get 50% of the face value. Our first issuance is a $500 million facility, and it's already 87% obligated. That took us about a month and a half. So we've already put in the a request for the next one, which will be a little bit over $1 billion. And then the cool thing about that, and why it's interesting, is that we're actually going to be the issuer of our own bond. Well, what does that mean? That means we can restructure it as income. And if you know anything about M&A work, you take a tech company that trades at 10 to 12 times EBITDA with the income of $1 billion, and now you have a $12 billion company very easily. Doesn't take a lot of time. How we're going to raise capital is very simple. We're going to continue. We're going to get another bond issuance of that, hopefully $1 billion or above. Continue to do the things we're doing, and then I'm going to give instruction for our attorneys to have us listed on the OTC and hopefully be put on the NASDAQ at some point. So we'll probably go public at some point, so we can have a continual stream of capital. But because we made the Inc. 5000 list, Marcus, we have a lot of vested interest from some very significant players. One of them on their NDA with it, they're in the upper 9-10 figures. They are interested in being equity partners and helping us with that capital part. So I don't think that's going to be a problem for too much longer, to be honest.
Okay. Now, if you had the excess capital you needed, what would scaling to 1,000 loans a month look like?
So that's our goal, is to do 10,000 loans a year. We would need, our average loan size is just under, believe it or not, just under about $1.5 million. So we would need north of $1 billion, probably every other month to be able to do that. And then we would also need a takeoff agreement where we could sell that. So before we do that, you have to, you don't want to wreck the system. So what we're doing is we're going to work on actually buying a broker dealer so that when we package up our own securities, we can sell them back to the institution. Now, again, the bond requires us to maintain them, but we'll just sell the bond packaged up with all the securities back on the open market and recoup the funds out of that. But yeah, if we get to 1,000 loans a month, we will need north of $500 million per month to do that. And That sounds scary and that sounds stupid money. But I don't know if you took a look at some of the data I put out there, and we actually paid a very good consulting firm before we got into this. There's about $38 trillion a year globally of real estate that trades. The United States makes about 16 trillion of that in and around the United States, right? Majority of that, believe it or not, is commercial or non-owner occupied, non-residential. And not to tell the secret sauce, we have some creative ways that we're going to get out in front of some of this refinancing thing. I have some tools and some APIs that actually going to give us alerts when people's mortgages are coming due. So very soon and very quickly in the near future, you probably will be getting targeted on Facebook and Instagram, depending on what you do, with offers from our firm for you to actually refinance your investment asset right from your handheld. That's going to be coming in 2026, where you don't have to ever step into a bank. If you need cash, if your kid's going to college, if your air conditioner broke at your rental house and you need to be able to do a refinance or cash out or do a rehab loan because you had a flood or whatever, God forbid, we literally going to make that real time from your handheld and your handset to be able to do that and move at the speed of business. And the way we're doing that is making prudent investments back into technology and also developing our own cryptocurrency to be able to fund your deal in real time. So it allows cross-border funding. So it doesn't matter if you're in Jamaica, if you got a cousin over in the Dominican Republic, if they want to invest in your multifamily United States, instead of their money getting tied up in the banking system for 2 weeks and not getting to you to close, you can just come on our platform, come out and get a loan or utilize an equity instrument and fund it right through our platform. So we're going to be making a conservative effort back into technology to improve people's lives and, more importantly, add value.
Okay, I like that. So looking to 3 to 5 years out, where do you see CR Equity AI?
I was talking to a really good mentor friend of mine yesterday about that question, Marcus, and his exact words were, if we get it to half of what he thinks we can get to, he doesn't think that we'll have the opportunity to realize that 3 to 5 year plan. But to answer your question, I see CR Equity coming in as a game changer. I don't think we're going to be the Amazon. Hell, I don't even think that we're even going to be the big kids on the block. I think we may put a small dent in a big pond. I personally think that CR Equity is going to really allow people who traditionally don't have the means to be investors to realize their dream. And because of that, and because, we don't charge subscription service, I mean, our fees are, they're nominal, right? For you to get great value. I see it as the Google model. I see it as, you sign into Gmail to get your email. I see you going on CR Equity to at least get a quote. Maybe you don't do business, but you're just like, man, let me go in there and see what's going on over there, see what they doing, and I just see it as a household brand for people to really look at, moving capital into their real estate transaction.
Okay, I like that. Now let's bring it back to the listeners, the entrepreneurs, the real estate investors, the small business owners who feel like funding is out of reach. What advice would you give them right now?
I would tell you that land, they don't make that no more. So, you know, get together as a community. If they want, they can hit me up on LinkedIn or Rob at CR Equity, or Marcus if you want me to come back with somebody else or come through you. However, we're putting together an actual equity fund. So if your listeners out there are scared, or if they're not really sure what they're doing, that's fine. We'll structure an investment agreement. We want to raise $50 million of equity, and we're providing a very significant return on that investment. That's going to be put directly back into asset-based lending, so there's really no possibility of actually losing the actual investment. And the cool thing about our AI, just to let you know, is that we are able to, quote unquote, cherry pick the projects that qualify and have the higher likelihood of success for us to deploy equity in, right? And we're constantly finding that we're able to go out and secure debt. We're able to go out and provide pref, but sometimes people are a little cash light. And in those instances, we're going to have our own equity fund where, if somebody wants to realize their dream, they're a couple $100,000 short, we're going to dip into our equity fund and make them, be partners with them, help them get through it. Two other things to that, Marcus, I added business line of credit and term loans to the platform. I did that because in looking at data about 6 months ago, I realized that at least in our fix and flip arena where we do like between 350 and 500,000, that we do a lot of those. Clients were coming up and they didn't have the $35,000, $50,000 for the construction draws, initial construction draw money. So I hooked up with a couple white label business loan capital providers and I integrated that in our platform. So now when a client comes on, they accept our term sheet and they're going through their financials and they notice that they're 50, 100, 200,000, whatever low or short on their real estate investment. Because we have all that data, we're able to actually send that over to our partners who do business lines of credit and term loans, and we can fill that gap. Now we've been successful at closing more deals, utilizing that kind of yin and yang, if you will. But with this equity line, instead of you know, paying somebody else to do those deals, we would actually step in and do those deals and retain profit on our end, and didn't have to just get a referral fee, but actually could be additional a significant amount of revenue. Actually, don't want to get into the numbers, but it's a lot where we could capitalize on where other people don't. We also, just to let you know, we're one of the only kind of direct lenders that allow like PACE equity. I don't know if you know much about that, and I won't get into that, but we have a conservation and impact mission as well, where we are investing in clean air energy, and PACE allows that. So we play really nicely with PACE. Our debt and equity instruments complement PACE and don't get out of it. So if you've got clients that are looking to do retro rehabs on existing projects or building energy efficient new constructions and things like that, I would encourage them to come onto our platform, go on our YouTube channel, Google about our PACE equity type of offerings with our debt solutions, because we can get pretty high on our leverages, sometimes 85, 95% loan to cost, loan to value, just depending on what the asset class is and type, utilizing both our internal tools and also PACE and some other preferred equity options. So we get very creative in how we package it. We don't like to lose, right? So I would just say that if you have a client out there that really doesn't know what they're doing, but they got the heart, they're well, coachable, they want to get in through it, and whatever else, I would tell them, look us up and give us an opportunity.
You mentioned, so what's the best way for people just to learn and connect with you directly?
I would tell you that, Marcus, your channel, like and subscribe and reshare, retarget, all that good stuff. But if they don't come through you, they can come directly to us at www.cr is commercial real estate equity, Equtiy.ai. They can book a demo, they can get a loan quote, or they can send us a direct message. We also have an AI assistant that's on board 24 hours a day that speaks better English than me and you. She also speaks 134 different languages as well. So if you have a question, she can help you. And then I can also give you the 1-800 number that they can call and speak directly to one of our chat bots and assistants that can take them through the loan application process.
All right, good deal. And I'll be sure to add everything to the description note section. Rob, this has been a powerful conversation. Thank you for sharing your story, your vision, and to everyone listening, stay tuned because the future of funding is moving faster than ever. All right, thank you, Rob.